There was at the bank. I kind of worked my way through there. And then after that, I worked for a couple of equity firms. I am registered as a portfolio advisor, a portfolio manager. So I've worked with investments for a long time. I've worked with clients for a long time, and I guess that's really what led into this role is just dealing with the client side of things for SmartCrowd.
Yeah, fantastic. So we want to keep this quite, casual as well. I'm sure a lot of you will have questions, and feel free to type away and ask us those questions because we will be answering many of those, and we will come back to them as well. So let's start off with the SmartCrowd story, how we began, and how the myth or the legend goes, so to speak, right? So SmartCrowd was started by a gentleman by the name of Siddiq Farid, who is our founder and CEO. Co-founder, should I say, because we have Mushfiq Ahmed, who is also a co-founder in the company. And a few years ago, Siddiq was looking at different avenues to invest in real estate. And he wanted to invest, but he didn't want to, expose himself to too much risk. And he wanted to kind of pool in money with like-minded individuals because he didn't want to purchase out assets entirely by himself. And he tried to see, how he could make this happen. There wasn't a mechanism in place, particularly here in the Middle East. And so he tried to get friends and family to come along and, put in some money. But ultimately that kind of fell through. And so SmartCrowd effectively started out of a personal need. And, it was, Sadiq started thinking that if him, as someone who's a financial professional with over a decade of experience, is having a difficult time getting like-minded individuals and having people galvanize around this kind of product, then there clearly must be demand for it. There must be other individuals out there who want to invest in a like-minded manner. And so hence he started SmartCrowd, and 2 years forward, it started in 2017. We were previously part of the DFSA, which is the Dubai Financial Service Authority testing license. And I guess, Ammar, you can tell us what the latest news is in terms of what's happened over the last couple of weeks.
No, perfect. So guys, some very exciting stuff happened. Basically, starting last week, SmartCrowd went international. So obviously before we were limited to investors and properties in the UAE. But since we have graduated from that license, we are now available to investors from all over the world. And somewhere in the near future, we will also start opening our borders to investments from all over the world. So you can actually say, if I'm sitting on my couch in Dubai, I could invest in a property in the UK potentially, or I could invest in a property in Canada potentially. And all just through the platform. It's very easy, very convenient. So very exciting news for us. We're obviously the first registered platform as well to get this. And yeah, we're very excited to have you guys as part of this. I don't know if some international investors are part of the podcast, but obviously welcome, and we're excited to be really talking to different people from different sides of the world.
Yeah, exactly. And I guess just kick off, I know a lot of you are interested in SmartCrowd and what it is that we're doing and how we can help people diversify their investments and build their wealth through micro investments in our case. But I guess let's start off with the alternatives that people have. And Ammar, you were a wealth manager previously. So typically, what are the kind of assets that people are looking at when they want to start investing?
No, that's a good question. And I guess I'll kind of bring it back a little bit too, because that's the first question I get from a lot of people. And I think since I have been on this side of the industry for so long, one of the first things you guys should actually look at is not what type of investment can I get into. It should really be more of a goal-based plan. And what I mean by that is, say you're plotting something on, say, Google Maps. You don't just choose a route without knowing where you're going, right? So that's what I mean by investment. You shouldn't just choose an investment without having a goal in mind first. So for obviously the asset classes we're going to talk about equities, bonds, we can talk about cash instruments, and then real estate. Now, depending on your situation, you can use all of those assets effectively. So it depends on your goal. You might use multiple assets. So depending on where you want to go, each of those asset classes will fit in at some point in your plan, depending on the market.
Yeah, exactly, precisely. And so I guess typically what we find is people generally tend to save up a lot of cash, right? And so Yeah, I know you've got a little bit of a cough, so that's perfectly fine. But so people tend to, save up a lot of cash, and there are obviously benefits with cash. Super liquid, super accessible. You can use it whenever you have it, essentially. But there are drawbacks, right, Ammar? And so, what are some of the major drawbacks when it comes to cash?
I think the biggest drawback from cash is usually a cash means in a savings account or just sitting in an account, so you're not actually earning anything. And you might not think that's bad, like I'm not earning anything, okay, fair enough, I'm not earning anything, but I get to keep my money. But actually what's happening if you take into account inflation is you're actually losing money every year. So if you have, say, $100,000 today, and you just don't do anything with it, you'll still have $100,000 in 10 years, but that $100,000 will buy you a lot less than it would have today.
Yep.
Right? Because the cost of everything goes up. That's basically what inflation means.
Yep.
So if you actually use cash as your major saving instrument, you're actually losing money every single year. You're losing buying power.
Right, precisely. Right? And even if you put that cash to a little bit of work, and as we found a lot of people, of course, do use savings accounts. Of course, once again, you have access to that cash. But even in a savings account, the returns don't necessarily kind of eat away at the fact that there's still inflation happening. You're still kind of still losing a little bit of money. Isn't that correct?
Yeah, so like most of the savings accounts I've seen in my day, if you look at, I know there's special deals going on all the time, but if you look at the average savings account, it's usually under 1%. And inflation in most countries is probably between 2, 3, 4%. So no matter what, a savings account, you're always losing money.
Perfect. Yeah. Of course, one of the other asset classes that now a lot of people are familiar with, and of course, Warren Buffett and Charlie Munger come to mind when we think of stocks, right, and the stock market. So, once again, from a liquidity perspective, stocks can be very, very liquid. Yeah. So, what are some of the pros about stocks? Why don't we start off with that? Because even though, sure, we at SmartCrowd are a real estate investment platform, we like to be objective about things.
No, for sure.
So, what are some of the pros about investing in stocks?
I think one of the major benefits of stocks is you can really diversify your stock portfolio. Like you could buy a stock in a company that does basically anything, right? Like you can invest in Apple, you can invest in Amazon, you can invest in an oil company, you can invest in a utilities company. Really, you can diversify throughout stocks. Another benefit would obviously be the potential to gain. The potential to gain in stocks is big, obviously, and the reason for that is you're really counting on that company's growth, their cash flow, however that company does, and you get to take part in that benefit because basically you're investing in the company, you're part owner of it.
Right. And now I'll play a bit of devil's advocate, right, when it comes to some of the cons. And obviously everything that has a positive can also have a negative, as we'll also find in real estate. But the thing with stocks as well is they don't necessarily always pay out constant dividends, right? So you're not going to get a fixed income from an investment perspective. As you said, they can appreciate in price, and as the value of the company increases, so does the value of the shares that you own. But then you're going on that valuation and not necessarily the fixed income that asset can provide you with. Yeah. And so usually the stock market is doing very well. What we find is that the bond market isn't doing so well, right? Yep. And it has an inverse relationship. So when bonds are doing very well, the stock market isn't doing so well. So what exactly are bonds? Let's just start off with that because some people may not be aware. Yeah. And what are some of the positives with them, and what are some of the negatives with bonds as well?
I think one of the major benefits of bonds is, like you said, they have an inverse relationship with stocks. So when you are building out your portfolio, you really want assets that aren't going to interact. Like if the market change happens, you don't want them to move the same way, right? So what that would mean is, say a change happens in the market tomorrow, you don't want two segments of your portfolio to move the exact same way.
Right.
Because when things are going good, great, but when things are going bad, your entire portfolio drops.
Right.
So ideally what you want to do is break it down. So if you do have, say, 40% bonds, 60% in equities, at one point that 60% is going to be making you money, but if the market changes, that 40% all of a sudden starts making you money as well, right?
Right.
So I guess I don't like using this thing, but it's like putting all your eggs in one basket, and you don't want to do that. What a bond is overall, a very easy way to look for you guys to look at it. It's almost like a loan. I'm sure most people have got like a car loan or a personal loan at some point in their lives. So basically the way that works is a bank lends you money and allows you to use it however you want. But for them to do that, you pay them interest and then you pay back the principal, right? So In the case of bonds, basically you're the lender, so you're lending money to a company, and what they do is they pay you interest, and then after a time period, they promise to return your capital.
Right.
Right now, bonds obviously come in different shapes and sizes. Like in different countries, bonds are going to return different interest rates. Different economies obviously have different risk levels. I guess you could look
Right.
at like a developed economy is probably going to pay lower than an emerging market.
Right, of course.
Right, so you can diversify that way. But yeah, I guess the major key looking at investing wise is they have an inverse relationship usually with stocks.
Right. Okay. And I think that's very important, to realize that point, that diversifying your portfolio is extremely important, especially when you realize that certain asset classes have inverse relationships with one another, because that's the way you can hedge yourself, right? So now let's come to real estate, right? This is the reason why everyone's kind of tuned in and they've heard us jibber jabber about a lot of other things.
Yeah.
But what are some of the benefits with real estate? Of course, we can talk about the cons as well.
Yep.
And why would someone want to have real estate in their portfolio? And specifically right now, when we're talking about real estate, we mean direct real estate. So by that we mean that you as the investor own the underlying asset. So what are some of the benefits of real estate? I know they come in different shapes and sizes: commercial, residential, you can have some industrial as well. So
That's true.
So let us know about your thoughts on that.
Yeah, I think real estate is a very unique asset because I don't know if you guys have heard the saying, you can't have your cake and eat it too. So real estate kind of lets you do that because the way it works is you're really going to make income in two different ways. So one's going to be, if you're using it as an investment, it's going to be rented out. So you're going to be getting a regular income throughout the lifetime of that investment as long as you hold it.
Yep.
And then ideally at the point when you sell it, you're going to sell it when it's at a higher price than when you bought it for. So you
Right.
get to profit at the end as well. Right? So there's not too many assets that give you the option of like getting money all along the journey. Because even if you look at stocks or anything, the only time you benefit is when you sell, and if it's at a higher price. So
Right.
during the lifetime of the stock, usually you're not earning anything, right? I mean,
Right.
same thing with bonds. Depending on what bond it is, sometimes there's small payments, but they don't usually work like that. Like you get some token bonds, something like that, but most people don't use those. So I think that would be one of the major benefits. A second benefit, again, in relation to a portfolio, is going to be it usually has no relation with the other assets. So if something happens in the stock market, it doesn't usually affect the real estate market. Something happens in the bond market, doesn't usually affect it. Obviously, there's going to be exceptions to that rule. 2008, for example.
Right.
But even that wasn't really based on real estate. That was actually more on the loans market, which actually it was more mortgages that they were looking at,
Right.
and it affected the real estate market because it had to do with real estate, but it wasn't the housing prices.
Right.
It was the way debt was constructed
Exactly.
at that time, right?
And I think that's the only time, the real estate market actually crashed with any major recession. If you look at historically, the real estate market hasn't crashed with the major global recessions. Just to reiterate on those points that Ammar mentioned, and I know he's got a little bit of a sore voice, so just to clarify as well, is the benefits are twofold. Number one, you're getting a constant return on your money through rental income. And the other is because the value of that asset has the potential to increase, then you can sell it for a higher price at a future point in time.
Yeah.
And so those are definitely the benefits. One of the negatives, though, let's be very honest and upfront about this, is that real estate is harder to liquidate. It's not easy. It's not a fast-moving asset. So if I wanted to sell something today, unlike a stock, I wouldn't be able to, correct?
No, for sure. It's a large asset which you can't really break up. So you say if your apartment's worth $500,000 or 500,000 dirhams, you have to find a buyer that can afford 500,000 dirhams, right?
Right.
So it's not like you can really split it up or anything. Whereas stock, if you own 1,000 shares, you could sell 1,000 shares to one person, or you could sell one share to 1,000 people. So that would make it super liquid, right? So that's the biggest difference. Is real estate you can't really split up.
Right.
Normally.
Yeah, I think that's usually one of the drawbacks, or you could look at it as a drawback of real estate. But coming back to the point which Ammar mentioned, was having real estate in your portfolio actually reduces your risk overall, actually, of your entire portfolio, and it actually optimizes your earnings. So if that's something in case that some of you were wondering or doing your own research and due diligence, what's important to realize is when you add direct real estate into your personal investment portfolio, it reduces the overall risk of your portfolio, and it actually optimizes those returns.
No, for sure. I completely agree. And it's a graph we usually use, and I hate mentioning it, but if there is any finance people, standard deviation. I don't. If you
No,
guys
we're not going to.
No. I'm gonna break it down. I'm not gonna use standard deviation, but it's a measurement of really how much something fluctuates. And when we did some research into that metric, I guess you could call it. So what it does is when you introduce real estate into a portfolio, in a portfolio that includes cash, fixed income, and equities, and you introduce real estate, the effect it has is actually brings down how much that portfolio is going to fluctuate,
Right.
but your returns actually get higher. So if I was to tell you have to take less risk to earn more, I mean, what would you do?
It's a no-brainer, right? I mean, exactly. And it also brings us to another research paper that we were looking at, and there was a number of academics that did some research on 16 economies. Now, these were mature economies, so these aren't economies in the Middle East, so we'll say that up front. But what they realized was the research was on something called the return of everything, and they compared different asset classes with one another. So the asset classes they compared were, the equity market, stocks, bond market, real estate, and there was something else perhaps? Cash, right, of course. And what they found was over a 100-year period. Now, I know that seems like a lot, and a lot of people don't want to necessarily hold something for 100 years. But what they found was that real estate, and specifically direct real estate, outperformed all other major asset classes, including stocks. And the reason for that, Ammar, is what you said earlier. It's because real estate allows you to earn in two ways. You can get income today, and you can get income tomorrow when you sell it for a higher price. A lot of the time, sometimes when we're speaking with certain clients, or people ask, well, how's the market doing? And this is something that we can discuss with about the UAE in general as well once we talk about the SmartCrowd platform. But I think what a lot of investors sometimes may fail to realize is even if the market is not performing exceptionally well, you're still making an income. You're still getting something from that asset that you're holding, because until or unless you sell that asset, let's say you bought something, real estate investment for $500,000, and if it's worth $400,000 today, as long as you don't sell it, it's worth $400,000 on paper. You actually haven't incurred that loss. So one thing that we always say is when you're looking at real estate investments, whether with SmartCrowd or with directly by yourself, is to have a long-term view in mind, because real estate isn't something that you can necessarily game, and it's not something necessarily, especially on our platform, that we're flipping houses or so to speak, right?
And I think another important point, which was a conversation I was having recently with a client, and it was based on, they said, what if the property price drops? Like, maybe I should wait a year, maybe I should wait 2 years, and by then I'll know. But what most clients don't take into account is if you do wait 2 years, say even if the property price drops by 10%, normally you'll be getting rental, say 7% even. So if you just hold on to that money and say property prices even drop and you bought it at 10% less, you actually lost out on 14%. So you actually lost out on 4% by just sitting there waiting.
The opportunity cost.
Opportunity cost, exactly. And that drop is not guaranteed, but what is guaranteed is, not guaranteed, but what has a much better chance of you making is that rental income. That's going to be there, but you're not making that move because you assume the market might do something.
Right.
But the rental is more of a sure thing, but you're hedging your bet on something that may or may not happen.
Right.
Right?
Exactly. And I think that's the thing, right? A lot of investors, and certainly, as individuals, as educated individuals, we often like to give ourselves a lot of credit and think that we can beat the system, we can beat the market. But, if you're going to look at any of the advice of these seasoned investors, it's always get in early, hold, have some patience, hold for a long time, and then reap the benefits. We'll talk a little bit more about the market in general, and specifically the Dubai market and how that's performing and what we're seeing currently with the with the lows and the highs. But let's talk about SmartCrowd now, right? People want to know about SmartCrowd, how easy it is, what we do, how we structure it.
Yeah.
And so let me just start off by saying that we've created a entirely digital platform which allows you to invest browse and start earning money end to end, all through the comfort of your home using your computer, right? As a landlord or as someone who would buy real estate on your own, you would be required to maintain that property. You would be required to find the tenants. You'd be required to do all the paperwork, go to the land department, do take care of everything with that asset since you own it, and then reap the benefits and the dividends of it. From our case, what we're doing is we're making it more accessible as well, right? So it's not only the fact that it's now hassle-free and it's digital and you can all do it from the comfort of your house, but the key component of Ammar is you can do it through micro investments and actually own a direct stake, correct?
No, for sure. Exactly. And I think what we were talking about before, one of, I guess, the drawbacks of real estate is it's not as liquid and there's a high startup cost. And those are two major things that hold people back. And aside all these factors that you mentioned, like having to take care of the property, having to manage the tenants, all that, it takes time.
Right.
And I think what a lot of people today don't have is a lot of time. Like if you're working, say if you have kids, if I don't know, you want to work out, whatever hobbies you have in between all that, do you have time to go take care of a tenant? Do you have time to manage all that? Normally not.
Right.
But I think the two major issues that we're solving is the high startup cost, because either you're going to have to put down a down payment, which is usually like 30%.
Yep.
Then you're going to get a mortgage, which means now it's a leveraged investment at that point. Mm-hmm. Or you're going to have to save up for, say, 5-10 years before you can buy it as cash.
Right.
And it's not feasible. Honestly, it's not feasible for most people. So on our platform, you could invest for as little as 5,000 dirhams and get into real estate, which was just not possible in any way before. Right. And the second part of it is, since we do kind of break it down into smaller chunks, if you do have to move out of that investment, it's a lot easier, because it's a lot easier for me to get rid of 5,000 dirhams worth of a property than it is 500,000.
Correct.
Right, and that's the two major, I guess, key factors that we're tackling here, and they're two of the biggest barriers.
Right. Yeah, I mean, definitely, it's accessibility. So in terms of the price points, as Ammar mentioned, it's a lower price point now. So the barriers to entry have been reduced for retail investors through a product such as ours, and a product like ours also improves the inherent risks that lie in real estate, which is liquidity, right? I mean, we're not saying that we've created a platform where you can necessarily trade real estate like stocks, but through a mechanism such as ours, it does become more liquid, as you rightly mentioned. So how do we structure this, right? The question we get asked all the time is, okay, well, if I'm in Dubai, as an example, because we had a lot of our transactions in Dubai, and now we've got a few in Abu Dhabi, but if I want to buy something, I can't get 10 people on a title deed, right? So
that's true.
So how are you guys doing this? How are you guys regulated? How does this all come about? And what is the process that allows me as an investor to actually tangibly own that asset? How do you ensure that?
Yeah, so the way it works, the way we had to set it up, and a lot of people ask why we did set it up this way, is exactly if we walk into any of the land departments and I say I want to put 50 people on this apartment, they'll probably kick me out right away. Like, I don't know if that would be a great reaction from them. So the way we set it up is basically we raise the funds for the property that we want to buy. And as those funds are being raised, the clients are obviously sending them over. They're sitting in an escrow account. Okay. So they're separate from our operating account. It's an escrow account.
So two separate accounts.
Yeah.
So the client's money goes into one account, which is completely segregated from SmartCrowd's account.
Exactly.
Okay.
And then as soon as we have the funds to fully buy that property, we transfer it to the seller, obviously. And then that property is under the name of an SPV, which we set up in the DIFC.
What's an SPV?
Now, an SPV is a special purpose vehicle, but in a very easy way to look at it would be it's like a company. Think of it as a numbered company, but its only function is to basically own that property. Okay. Now, we set that up, and the investors actually become shareholders in the SPV. So say you invest on our platform and you invested in 10% of that property, you'll be 10% shareholder in that SPV.
Okay.
Right? And it's also it's very open in that way. Now, can you explain to us where people could look this up, this process?
Yeah.
Like, how is it transparent for people?
Exactly. So, that's all well and said, as Ammar mentioned, that the SPV effectively owns the property and you are a shareholder in the SPV, so that when the property earns some income, some rental income, you get it through that SPV, right? So that's all very clear. But how do you ensure that it's clear? Where can I look this up? Where's my name? And the answer is very clear. We incorporate all our SPVs in the DIFC, so the Dubai International Financial Center. And what we allow is a very transparent mechanism where you can actually put the name of the SPV. So of course, when you become a shareholder in a particular property, you get the name of that SPV. You can go onto the DIFC register. So it's a public register online. You can Google it. Yeah. And then you can type in that name in the search in the search bar, yeah. And it'll turn up all the shareholders of that particular SPV or company, as you rightly said. And so it's very clear as to who owns that SPV. But then even if you asked, well, what about the title deed? Yeah. Well, the title deed is actually under the name of the SPV. And so if you were to actually go to the land department, they would be able to tell you that this particular property is owned by this SPV. Yep. And then you can obviously trace that back to your ownership, which is completely entirely public.
Yeah,
right?
Exactly.
And what about the documentation when it comes to, the number of shares and the title deed and all that stuff? So once I've invested my money, yep. So let me get this straight. It's 100% equity play, right? Yep. So SmartCrowd is not using any sort of mortgage or any loans. Yep. So we raise 100% of the funds. Yep. And once we raised 100% of the funds, at that point in time, that's when we acquire the property on behalf of the investors.
No, exactly.
And I think one of the misconceptions as well that people have at a certain point is, well, does SmartCrowd own anything in the property? Yep. And the answer to that is a no. SmartCrowd facilitates that whole transaction from end to end for investors, but we personally don't have a stake in that. But that's not to say that we aren't aligned in our goals with our investors, yep. Right? So, of course, SmartCrowd is a business at the end of the day. We need to keep our lights on as well. We need to feed Ammar so that he can go get himself some good health care, right? And the way we do that is we actually align our fee structure with that of the interests of the investors, right?
Oh, for sure.
And how do we do that, Ammar?
Yeah, so basically the way our fees are set up right now is at the point of entry. So think about when you're investing, it's going to be 1.5%. So a very easy example, if you're investing 10,000 dirhams and you want to put 10,000 into the investment, you would do 10,150. And at the point of exit, so however many years you decide to keep the investment, at the point when you want to sell it, it'll be 2.5. So again, if it's worth, let's just say 10,000, it didn't grow, it would be 250 dirhams.
Right.
Okay. The reason we split up this fee, because we did experiment putting it all up front, would be if I'm making all my money up front, I'm going to have no incentive to really, I guess, find the right type of investments that we know are going to grow in the future because I'm making my money up front. So
right.
in my head, obviously you always want to do what's right by the client, but your business should be aligned with that. You should be set up that way, right? So this way, you guys know that we are picking properties because most of our fees, actually, if you look at it that way, the majority of them actually come at the tail end. Right. So if we put up any type of property that, say, does not grow in the future or the rent is not good, basically what's going to happen is we're not going to get our fees either. Right. So as you guys are growing, so do we. So that's how our interests are aligned, and we're kind of on the same team, and we're going through this journey together, rather than us handing you the keys to the car and then you drive away and we just walk off into the sunset, right?
Right. And I think that's a very important point, right? We want to ensure that we do the client, we give the client the best service, and especially, as Ammar said, that our interests are aligned, because we're not here to earn a quick buck. At the end of the day, when we put the properties on the platform, there's a team that's doing thorough due diligence on the viability and not just the viability, the attractiveness of that investment, right? So I think from a numbers perspective, because people want to know the numbers, for every about 100 properties that we are, screening to put up on our platform, we have about 30 that are in the process of being analyzed, and out of those 100, we put up probably about 5 or 6 of those properties, right? So the numbers are really, really small in terms of, there's a really high rejection rate in terms of the properties that we put up, and we're super selective. And the reason for that is because we want to ensure that we put the properties that we believe in most, so that when investors invest in those as well, and when they grow in the future, that we grow along with our investors, right?
Yeah.
So that's a little bit about our fee structure. That's a little bit about SmartCrowd in terms of the mechanism, in terms of the structure through the SPVs. Of course, how you earn your income, it comes all through a digital wallet, which is, which you have access to as a member and a user on the platform. You can withdraw your funds at any time. You can, click a button and link it to your bank and then withdraw those funds, or you can choose to reinvest. That's entirely up to you. I think we have a couple of questions at this point. And is there a question, Adam, can you just share with us? Sure.
Yeah. One question from Maitham is, will you guys have or launch an app, because it will be much easier?
Yeah. No, so Maitham, that is a great question, right? And at this point in time, we're looking at an app, but we are currently not launching one. We have a web-based application, of course. A mobile app is on the cards, but we're at a point right now where we need to build quite a bit of critical mass, right, to kind of justify that. Now, on our platform, we have over 1,200 people that are on our platform, and we have over 100 users. So we've done 7 transactions. We've completed those transactions. And as Ammar said a couple of weeks ago, or last week actually, we just opened up the platform beyond the UAE's borders. So we're expecting to get a little bit more growth now that that's possible. So you're right, from a usability perspective, an app would definitely help, and we definitely take that feedback very seriously. But for the time being, I'm afraid it'll have to be through the computer. But if that's a major concern, then please do write to us at info@SmartCrowd.ae, and we can see how we can help.
Oh, for sure. And then I guess the last thing we haven't really discussed is kind of the user experience, I guess you could say. Like, everything we said is all good and well, but like, how do I actually invest? So it's a very simple process, guys, and that's part of, I guess, our pitch to clients is we try to simplify it as much as we can. So the sign-up process is very quick. It's probably going to look like a lot of the process, like say if you want to open a bank account, any of those things. So first step, you're going to fill in your general information. We're going to ask for things, obviously, like your address, your name. We're going to ask for your occupational details, those kinds of things. And then really what do you have to submit? 2 pieces of ID. You have to submit your passport, and you have to submit a piece of ID that really shows where you're resident of. So it could be a driver's license, it could be your Emirates ID for the UAE. So whichever country you're in, those are really the 2 basic pieces of information that we require. And then really it'll take you like 10 minutes, and then within 48 hours your account is active. So it's very simple, very easy user experience. Obviously, we're always here to help you out if you get stuck anywhere, so you can always reach out to us through email. You can give us a call. So I think that's one of the major keys that we've tried to do, is just make investing in property as easy as possible, right? So within 48 hours, you could be set up to invest in real estate.
Exactly, and you have none of the hassles of going to the land department, of signing any documents, because everything is done digitally. And the reason we require all these documents, once again, just to reiterate what we said at the beginning, is we're the only regulated real estate platform in the entire region. So legally, we're obliged to do this. We're mandated to do this by the DFSA. And in fact, as investors on our platform and members, you should be happy that there's a platform that's doing all this thorough due diligence to ensure that your money is safe, right? Just like a bank would.
Perfect. And I don't know if I was using a platform, if they didn't ask me any questions at all, it would probably be hard for me to trust them. So the fact that we do make you take some steps is obviously a positive.
Right. Well, I think that's it from our end in terms of how SmartCrowd works. Just a general overview. Of course, there's some more insight online, and of course we urge everyone to complete the registration. It's free. So once they're able to do that, they have access to the platform, which not only gives them access to the reports that we've done and analyzed ourselves, but you also get access to independent third-party reports that kind of shows you our analysis, and then so you can make an objective view or an objective decision in terms of whether you'd like to invest in a particular property or not.
No, 100%. And then I guess we could do some market updates. I think some big news has come out since the last time we did one of these. One of the other major things was the council that was made in Dubai. I think Sheikh Mohammed put out something, a lot of news, that really they're building a council that's going to not limit, but there will be a process in place for newer developments that are going up. Because looking at the UAE as a general, I think one of the problems people have started noticing is there's a lot of supply, but the demand wasn't there.
Right.
So if they start to control that supply, again, you say this quite often, everything's cyclical.
Yeah.
Right. So really, eventually, if you slow down the supply, the demand catches up, and then if it's slowed down, the demand gets higher than the supply, and that's what raises rents. That's what raises property prices, and then eventually the supply will go up, and that drops everything. So that's really the cycle. But if they're taking that step, I think the UAE recognizes that. They've caught on to where they are in the cycle, and if they take steps, that's exactly at the point where it flips. And when you're looking at an investment, people are always like, oh, the property prices are down. Of course they're down. That's why we're telling you to invest right now. Like, if property prices have been rising for the last 4 years, why would you invest? Because one of the things you'll notice about investors overall, and I used to hear this all the time, it'd be like, oh, I heard from my neighbor, he made a bunch of money doing this. So one of the things I always laugh at is, if you're hearing it from your neighbor, basically everyone knows.
The boat is sailed.
Do you know what I mean?
Right.
So basically, if everyone already knows that growth has already happened, so the part you're getting in at, you might catch the tip of it, but you'll definitely catch when it drops. Right? So if you're hearing it from somebody who's not in the field, or somebody that heard it from somebody else, you've already missed the boat, so don't try to jump in at that point.
Right.
And the point you want to jump in at is when things have been dropping for a little bit, because it is all cyclical, especially real estate. So say if that has dropped for 4 years, you're a lot closer to the bottom than you are at the top, which means that's the point you get in at, because you'll catch that growth the entire way up, right?
Right, makes sense. And I mean, a point to that is as well, like, we saw, and I'm digressing a bit, but the kind of crypto boom, and in terms of Bitcoin, like last year, a couple of years ago, when it was growing like crazy, and I know the price is still not, I mean, it's still quite high, but, when everyone was talking about the rage and, Bitcoin's going up and you should buy, and we saw what happened, right?
That's true.
It got to a point where you had so many people buying, and then obviously it drops, right? and so it's the same thing with real estate as well as an asset class. Of course, it's a bit more secure, it's tangible, it's hard asset, and one other parting thing that we could leave with is the fact that despite it being cyclical, over the long term, it still has a positive slope, right?
Exactly.
So even though the market may be doing this, it's doing this upwards, right? And even if you look at the last bottom, which was 2011 in Dubai, specifically August 2011 is when the last bottom happened. Since then, if you go from then until now, even though property prices have decreased over the last 4 years or so, the capital appreciation has been 3.4 or 3.5%.
Yeah.
So there's still been growth, but a lot of people don't see that because they just look at things in terms of how they're seeing the market as it is in the present without taking into account what it was previously. So as long as you've got a long-term view in mind in terms of holding your investments, and you're a bit patient, and you are consistent and disciplined, then you could be a successful investor and grow your wealth.
No, I think if you could leave everyone with one lesson, it would just, again, it goes back to having a goal, but it shouldn't be, when you're looking at investments, if you're trying to make a quick, if it's a very short time period that you're working with, it's probably not the right thing for you, because anything can happen, right? Anything can happen tomorrow in any market. So if you're counting on getting out in 5 days, you're leaving yourself a very short time period, right? Where if you're working with 5, 10, 20 years, if something happens tomorrow, you have 5 years to make up for it. So you don't lose sleep over it, right? So.
Perfect. Well, I think that's it from us. We'll just check. Let me just check if we've got any more questions. Let me step around to the other side, and maybe I can yell those questions at Ammar, and I can see if we've got any more questions.